What is up, Gen Z future CPAs, and welcome to another explainer. Go ahead and grab your digital notes, because today is not just about passively reading through dry tax laws. Nope, this is an elite, brain-hacking masterclass that is specifically designed to guarantee your 3-year LSCPA retention. We are literally taking the complex Philippine tax code and wiring it directly into your long-term memory.
Okay, let's dive right into our study map for today. We're going to hit O1, the luxury tax, O2, the beauty tax, O3, the earth tax, and then finish up with O4, rapid recall.
Section 1, the 20% luxury tax. Now, I want you to literally burn this massive 20% into your visual memory right now. When you sit for that board exam and you see questions popping up about non-essential goods, your brain should automatically flash to this stark, bold number. It is a 20% ad valorem rate, which just means it's a percentage based on the actual value of the goods.
So the crucial point is, what exactly does the Bureau of Internal Revenue consider non-essential? Well, we're looking at things like jewelry, perfumes, and yachts. But hey, here is the massive LICPA trap that examiners absolutely love to set. Notice how it says fine and imitation jewelry? Yeah, that's right. Whether your client is buying solid 24-karat gold or just some base metals masquerading as luxury, the BIR is still going to hit it with that exact same 20% tax.
The law also specifically targets fragrances, and it actually groups them into 2 technical categories. Over on the left, we've got true perfumes, and these contain at least 10% by weight of perfume concentrate or oil. Then, on the right, we have toilet waters, which are way less concentrated, usually used as a body splash or an aftershave. But you know what the beauty of this is for your mental schema? You really don't need to overthink the chemical composition for the exam at all. Why? Because both of them get slapped with the exact same 20% tax rate, the whole shebang.
Section 2, the 5% cosmetic surgery tax. Lock your eyes on this number, 5%. When we start talking about non-essential services, and specifically cosmetic surgeries, we actually drop way down from that 20% luxury rate to a highly targeted 5% rate.
Now, to completely bypass your short-term working memory and encode this directly into your long-term recall, we are going to use a brilliant mnemonic straight from our top review sources. Just think of the word opera. The word opera has exactly 5 letters. Therefore, the tax is 5% on the gross receipts derived from invasive cosmetic surgeries. It's that simple. Opera, 5 letters, 5%.
Now, what's really interesting about this next part is the golden rule for exam traps. It is all about where exactly the tax liability is triggered. Basically, it completely relies on whether or not the procedure breaks the skin. If it is invasive, meaning it enters the body through an incision, like a rhinoplasty or liposuction, boom, it's subject to the 5% tax. But if it's non-invasive, meaning there's absolutely no incision, like laser treatments, injectables, or an air dissector, it is totally exempt. Think of it like this. If there's no surgical cut, there's no 5% cut for the BR.
But hey, even if the skin is broken, the BIR is not completely heartless. There are some very strict medical exemptions. If an invasive surgery is performed to correct a congenital defect, or maybe to fix a personal injury from a bad accident, to treat a disfiguring disease, or if it happens to be covered by PhilHealth, the BIR actually gives it a pass. That 5% tax is only ever going to apply when the procedure is purely 100% for aesthetic enhancement.
Section 3, basic mineral products tax.
Okay, this matrix is basically your ultimate exam cheat sheet. Notice the really critical shift in the rules right here. Coal and coke use a specific tax, meaning it is a hard, flat peso amount, specifically 150 pesos per metric ton. But as soon as you move down to non-metallic minerals, metallic minerals, and indigenous petroleum, it entirely switches to an ad valorem tax of 4% and 6%. Visualize this grid in your head. I promise it will save you on those tricky multiple-choice questions.
Section 4, the BSP Gold Exemption.
Let's trigger that active recall generation effect in your brain right now. I want you to read the question on the screen. Take just a second and really think about your answer. Boom! The answer is exempt. If your brain generated that correctly, absolutely incredible job. But hey, if not, don't worry. The correction you just experienced actually makes that neural pathway in memory so much stronger for the actual exam. And this brilliantly illustrates just how incredibly specific the tax code can be. Under RA 1156, this is not just some blanket exemption for anyone out there digging up gold. To be legally exempt from that 4% excise tax, the gold absolutely must be sold directly to the BSP, and the seller has to be either a registered small-scale miner or an accredited trader. If some massive large-scale mining corporation sells gold, no way, they are not getting this exemption.
Section 5. Active recall hacks.
All right, rapid fire 1. Try to recall the exact, precise phrasing of the tax base for those luxury items like jewelry and yachts we talked about earlier.
And here it is. It's the wholesale price or the value of importation. But listen, the absolute key detail that examiners will use to completely destroy your calculation is that little part in parentheses. The base must be net of the excise tax and the VAT. Do not, under any circumstances, calculate that 20% on a grossed up number.
Rapid fire 2. Think back to our medical definitions under the beauty tax. An air dissector. What exactly is the tax implication there?
It is entirely exempt. Why? Because an air dissector is a non-invasive procedure. It literally doesn't break the skin, so it avoids that 5% OPR tax completely. Honestly, guys, trust your mental schema. You have these concepts locked down tight. Now, before we wrap up this explainer, I want to leave you with a bit of a provocative thought. As a newly minted Gen Z CPA, just imagine how much money you are going to legitimately save your future clients simply by knowing the intricate tiny differences between a non-invasive cosmetic procedure and a taxable surgery, or by strategically guiding a gold miner to sell directly to the BSP. Your knowledge isn't just for passing some exam, it is high-value leverage in the real business world. Keep studying smart, and I'll see you in the next explainer.